Hello friends, welcome you all. Today in this lecture we are going to discuss the nature of offer documents. Offer document, it is an important document, contains new fund offer, then SID, that is scheme information document, and SAI, scheme additional information. Offer document is important from the viewpoint of investor. Investor gets all the information about the scheme and about the mutual fund, about the AMC, objective of the scheme, etc. So it is expected from investor to read all these offer document carefully, and then only invest in particular mutual fund scheme. So let us discuss. We will start today from the new fund offer, and in the next lecture I have planned to discuss the SID, scheme information document, and SAI, that is scheme additional information. So let us discuss with the formal definition of new fund offer. New fund offer is the first time subscription offer for a new scheme launched by the asset management companies. It is a first time subscription. It is like IPO of any company, that is initial public offering. NFO is related to mutual fund and IPO is related to stock market. So a new fund offer is launched in the market to raise capital from the public in order to buy securities like shares, government bonds, etc. from the market. Like IPO is the kind of method to raise the capital from the public by selling shares. But in case of NFO is also the mode of or medium of raising capital from the public, but here the motive or the objective is different. Here objective is to invest in the stocks, shares and government bonds, depending on the objective of the scheme. In our description, we can say that NFO is similar to initial public offer with an attempt to raise capital from the market. NFOs are offered for a stipulated period. There is a certain period in which the public have to subscribe. This means that the investors opting to invest in these schemes at the offer price, in most cases the offer price is fixed at rupees 10, can do so in this stipulated period only. After the NFO period, investors can take exposure in these funds only at the prevailing net asset value. After the closing of period of NFO, the investor have to buy it from this on the stock exchanges at NAV, that is net asset value, at that time. What are the key steps to the NFO? Number one, the first AMC decides on a scheme to take to the market. This is decided on the basis of inputs from the CIO, that is Chief Investigation Officer, on investment objectives that would benefit investors, and inputs from the CMO on the interest in the market for the investment objectives. Then AMC prepares the offer document for the NFO. This needs to be approved by the trustees and the board of directors of the asset management company. The documents are filed with SEBI. The observations that SEBI makes and on the offer document need to be incorporated. After approval by the trustees, the offer document can be issued in the market. Next steps are, the AMC decides on a suitable timetable for the issue, keeping in mind the market situation. AMC analyzes market situation, what is going on, what other schemes, NFOs are in the market, IPOs in the market. So expected response from the public for the NFO, all things analyzed by AMC, and then AMC decides the timetable for the issue. The AMC launches its advertising and public relation campaign to make investor aware of the NFO. Advertisement information is circulated among the public to get the attracted in a particular scheme, to get to make investor aware about NFO. The AMC holds event for intermediaries and the phrase to make them familiar with the scheme. Its unique features, benefits for the investor, etc. All the information about the scheme is given. Its objective, unique features than other schemes, benefit for the investors, the attractiveness of the schemes are focused among the public, and it it makes the aware of the public to buy NFOs. The offer documents and application forms are distributed to market intermediaries and circulated in the market so that investor can apply in the NFOs. Three dates are important for in case of offer document, that is the NFO open date. This is the date from which investors can invest in the NFO, new fund offer. NFO close date is important, second date. This is the date up to which investors can invest in the NFOs. And third date is scheme reopening date. This is the date from which the investor can offer their units for repurchase to the scheme at the repurchase price, or buy new units of the scheme at the sale price, which is the net asset value itself. The AMC announces sale and repurchase prices from the scheme reopening date. Reopening date is the date at that time period the investor can sell their existing unit to the new buyers, or they can add to their existing stock of units. So buying and selling can be done in this time period, that is reopening date. In case of open-ended fund, this cannot happen with the close-ended fund, because close-ended funds do not have the reopening date. They have to buy on the stock exchanges only. Close-ended scheme have an NFO open date and NFO close date, but they have no scheme reopening date, because the scheme does not sell or repurchase units. Investor will need to buy or sell unit in the stock exchanges where the scheme is listed. Under the SEBI guidelines, NFOs other than equity linked savings scheme and Rajiv Gandhi equity savings schemes can remain open for a maximum of 15 days. Allotment of units or refund of money, as the case may be, should be done within the 5 business days of closure of the scheme. These all the regulations and important guidelines given by the SEBI, so that transparency and the convenience made by the AMC should follow the convenience of the investors. Further, open-ended schemes have to reopen for sale and repurchase within 5 business days or days of the allotments. In case of only open-ended, close-ended cannot be reopened for sale and repurchase. What is the role of offer document? Investors get to know the detail of any new fund offer through the offer document. Information like the nature of the scheme, its investment objectives, and terms are the core of the scheme. Such vital aspects of the scheme are referred to as its fundamental attributes. It is called fundamental attributes, and these fundamental attributes gets from the NFO, that is offer document. This cannot be changed by the AMC without going through specific legal processes, including permission of investors. Since the disclosure in the offer document are as prescribed by SEBI, it is a legal document that helps investor to take a balanced view on the investment. The offer document is one of the most important sources of information on the scheme to help prospective investors evaluate the merits and demerits of the investing in it. So offer document is important source for information on any kind of scheme for investors. So it is expected for investors to go through this offer document and then only invest in a particular scheme. Even post investment, the offer document can be referred to understand the investment objectives, the various commitments made by the AMC, and how well these commitments are being lived up to. Means offer documents is important from the viewpoint of post investment also, because it can be referred to understand the investment objectives and various commitments made by the AMC after the scheme launched, and how well AMC fulfilled that commitments, objectives, etc. We can judge on the basis of offer document. Investors need to note that their investment is governed by the principle of caveat emptor, that is, let the buyer beware. A buyer should be aware about the all the perspectives of the scheme. An investor is presumed to have read the offer document even if he has not actually read it. So it is considered, it is granted that the offer document read by the investors, and investor is aware about the investment objectives, schemes, commitment made by the AMC, and they do not have any kind of complaint about that. It is presumed, and that's why in at a future date the investor cannot claim that he was not aware of something which is appropriately disclosed in the offer document. So offer document is important kind of thing which is investor expected to read carefully and then only invest in the scheme. So it is presumed that the investor have read all the things and then only invested in the scheme, so that at a future date the investor cannot claim that he was not aware of the something which is appropriately disclosed in the offer document. So friends, I think you got something from this lecture. If you have any kind of questions, queries, then you can write, you can text, you can call me. Thanks for watching. Write your name in the comment box. Thanks for watching. See you in the next lecture. Good day.